And it's 10 a.m. right here in Lagos, Nigeria. It's a brand new trading week right here, and one after the Valentine week, where investors in Nigeria's equities market had a great time. We saw new highs. That's for the all-share index last week. But let's get a check on what's going to play out this week. We get direction there. Let's get to the top stories that set your investing agenda now. Starting with oil market now. We see oil prices, they fell for a fourth day today on expectations. A Russia-Ukraine peace deal that could ease sanctions, disrupting supply flows, and on concerns that global tariff wars could slow economic growth and weaken energy demand. And we're seeing the impact right there. Crude futures, that was down by 0.2% to $74.59 a barrel, while Brent, that slumped 3.1% in the past 4 sessions after U.S. President Donald Trump said his administration officials announced they had begun discussions with Russia to end the war in Ukraine. And we see the impact there on the prices with WTI, that's the U.S. grade, holding on to that $70 level by hair's breadth there, 70 by 51 cents, 0.30% down. And so this might give us direction on what's going to play out in the oil market this week. It was mixed reaction. That's for the close. When you look at the total trades for Brent and WTI, Brent was positive last week, while we had negative outing for WTI last week. All right, so the last trade to the FX market. Now, the last trade for last week at the Nigerian Autonomous Foreign Exchange rates, that experienced a decline. That depreciated there by about 0.41%. That's for the NAFEX window. For the CBN rate, there we don't have that close, but it's mostly unchanged at 1,513 now. So we're still seeing that trading range there. That's for the Naira in the FX market. Not much volatility last week, but this week, this is the rate setting week right here in Lagos, Nigeria, and definitely we'll see how it plays out for most of the markets that we track. All right, let's get some other stories now. Nigeria's Purchasing Managers Index, that's the PMI for January 2025, that rose to 50.2 points, marking the second straight month of economic expansion. That's as reported by the Central Bank of Nigeria. While industry and agriculture showed growth, the services sector that contracted. Key indicators like output, new orders, employment, that expanded, but raw material stocks and supplier delivery times, that declined, according to the CBN, pointing to some supply chain challenges. Then of the 36 subsectors reviewed, 17 saw growth, led by transportation equipment, while 17 declined, with forestry hit hardest, and 2 that remained stable. Transportation equipment emerged as a leading subsector, that's in terms of expansion, whereas the non-metallic minerals products subsector experienced the highest level of contraction. The overall industry sector index stood at 51.3 points, confirming an expansion in industrial activities. That's for January 2025. So quite an impressive PMI there for January. All right, to other matters now. As President Donald Trump's recent policies, that's continued to bring some volatility to the markets. According to Dr. Muda Yusuf, Director CEO for Center of Promotion of Private Enterprise, the Trump administration policies have significantly influenced global energy markets with increased output and calls to lower oil prices there. We did hear from the president there saying that OPEC should have lowered prices by now. But so Dr. Muda is saying this definitely poses a risk for government revenue because we heavily rely on oil for our foreign exchange earnings. He's also saying foreign remittances and foreign aid, that's also going to have issues, at this point with the immigration policies we're hearing so far from the Trump administration. He's saying that's going to affect most of our diaspora out there, which would in turn impact diaspora remittances, with over 500,000 Nigerians in the U.S. Changes to documentation requirements that may reduce remittance flows. Furthermore, the potential suspension of U.S. aid programs, which contributed about $1.02 billion in 2023 to sectors like health, education, governance, that could create significant financing gaps for Nigeria. And the federal government of Nigeria and the Exim Bank have officially signed the host country agreement for the 32nd Exim Bank annual meetings, that's the AAM, set to take place in Abuja, Nigeria from June 25th to 28th, 2025. The Flexing Bank annual meetings are one of Africa's most highly anticipated events, featuring a series of high-level policy discussions, presentations, and side events focused on the continent's socioeconomic development. The meetings also include networking sessions designed to foster business integration through trade and investment. So I'm guessing investors will be definitely looking out for that come June. All right, we'll take a break now. When we come back, we'll get a sense of what to expect. That's for investing this week. What investors are going to be looking at? That's in a moment. Just stay with us. Welcome back. Well, it's still a brand new trading week. Time to get direction of how the economy will shape investor sentiment and what investors should be looking at this week. Well, we had results there from Nigerian Breweries PLC, and it's a big one. They crossed the ₦1 trillion mark in revenue returned in revenue, and that's a return to profitability for that brewer there. We'll see the results there. It's a big one, and looking at the revenue, that's up 80.8%. Cost of sales, 764.5 billion. That's up 97.5%. Gross profit, 319.9 billion, up 50.5%. Then the loss on FX transactions, that's up about 2.8%. I'm sure some will say that's quite favorable. So a couple of a flurry of earning reports, coming out there. This latest one for the full year, that's 2024. All right, let's bring in Mr. Mukhtar Mohammed. He's the CEO of Finance with Mukhtar, joining me right here in the studio. It's good to have you. Good morning.
Thank you, Nadia, on a Monday morning.
On a Monday morning, yeah, because at the end of the day, it's another week and another naira. It has to be made.
Yes.
This time, depending on where your money is. But looking at Nigerian Breweries there, they're crossing the ₦1 trillion naira level. That's for revenue. That's
fantastic. Fantastic. Big good news. That stock has suffered. Right. Remember, negative shareholders form. But we need to give the management team of Nigerian Brewery thumb up for how they've been able to turn around that company, from a negative to where they are. Remember, they did the right issue, and also the parent company also believing in this economy, and there was a really need of restructuring, closing of some of their breweries that they think were not profitable, concentrating in other breweries that were. They did a lot of changes, and again, FX volatility, like you said, 2.something%, is very good compared to where they were coming from. Also, we still have that negativity in terms of the final year result. But you look at the 3 months result, and we got this negativity now. But looking at the over year, if in a 1 year, then you definitely know that this company is out of the wood already. And I think investors shouldn't take their eyes off Nigerian Brewery for now, because it's a stock that will begin to tick the market very soon. They are not paying dividends, but you can see that the prospect is very, very high. No more negative shareholder form. They have a positive shareholding form. That means they won't be borrowing any longer from banks or other corporate entities. So that gives them enough form for expansion. That gives them enough room to take a breather a little. And so definitely good results.
And I guess that should be on the back of the naira being quite stable.
Well, the naira.
Talking about the FX losses.
Yeah, the naira has been in a corridor of stability. I don't like seeing stability. I say corridor because you see today is 160, today is 1570, 1550. But at least we are having that 1,600, 1,500. Hopefully, with the government benchmark, budget benchmark of 1,400 to the exchange rate, that could be a big game changer for companies and Nigerian Brewery. So fantastic at the current rate of 1,500. We are doing this. Imagine what 1,400 will do for Nigerian Brewery going forward. But I think, again, the breweries, I think they are not looking at that. They are looking at how much they can perform. Remember, the Nigerian Brewery have always been known to perform better towards the last quarter of the year. You and I know why that's happened. So definitely it's a stock investors should need to watch out for.
Right. And, talking about the FX losses and, the naira being stable at this time, if we carry on, like this, and hopefully strengthening comes in for the Naira, that means we might start reporting FX gains for most of these companies.
Yes, Ladi, but you said it in your report, but there's a challenge. The challenge is still that low oil price that we are definitely going to see in the next 4 years. Definitely going to see, Donald Trump's purse of oil and
drill, baby, drill.
Drill, baby, drill, and also beginning to encourage export. And you can see that he's trying to build a relationship with Russia. Remember, Russian oil has not been in the international market for a while. So he's trying to build a relationship with Russia, trying to ignore the European Union also. That also is a strategy that could bring down price of crude. So definitely, that's why we are skeptical, we are optimistic, and at the same time skeptical that let's just be able to drive down crude, exchange rate to 1,400. Now the beauty about it is that for local refinery, it's good news for Nigerians, for the majority of Nigerians, for the average Nigerian. That means low oil price favor a low price of PMS, and our economy is PMS driven again, and that is largely driven now because we enjoy that now because we have local refinery, and they also have this Naira to Naira exchange swap deal to buy crude oil. That for me is what Donald Trump coming might not boost our reserve as it is, but might help our local economy for low oil price. We're already seeing the price war. We are already seeing some stations selling for $9.25, NNPC selling for $9.45, and others are selling. So we are going to enjoy that trade war.
So low
price war,
low oil prices, negative for government revenue, but positive for PMS prices. And it's also funny on social media. You see most of those comparisons when it comes to NNPC fuel.
No, I think that's
quite funny.
That's quite funny. That's for me. I think that was the marketing. I wonder why people go that far. Just leave that to them. Whoever is buying to do that, you don't come to social media.
Who cares which fuel
lasts longer? We've been buying those fuels thus far. We've not had any issue to compare. And the NNPC came out to say that some of our own fuels we've been get them from Dangote refinery. So why I think that should stop.
So let's end the war.
Let's end the war. Let's enjoy that price war. Let's forget about the marketing war. Let's enjoy the price war. Exactly. I think the price war is good for us. Let the price keep going down, and then the average Nigerian. But unfortunately, Ladi, the average Nigerian is not really smiling because the cost of transportation when petrol was above 1,000 it's still the same cost of transportation they are paying today, even when petrol has gone down to 900. So it's more or less still gets back that is the richer Nigerians that are enjoying this lower price because their own car consumption now has reduced in terms of price for them. But the average Nigerian is just up. We had. And
that was what we're trying to avoid in taking out the subsidy so that everyone could enjoy.
But we are not seeing that. They might enjoy it in other space, but in terms of transportation from point A to point B, especially in Lagos, they are not. Even the government of Lagos State is planning to increase its tariff also in BRT buses. So you see, and despite the low cost of even diesel, and also despite using electric cars. So we need to begin to look as a government what we need to do to favor the downtrodden, not just some of this policy of this current administration. I can tell you it favors the middle class and the rich, but the average Nigerian have not really enjoyed this administration. So the administration needs to rejig its policy and see how it can help the average Nigerian.
Yeah, no, profiteering is something we need to really handle, in these parts. Well, let's get back to the markets at this point. We're seeing an announcement there by PZ Cussons to convert $34.2 million debt. They're converting that to equity. And that's for the parent company there. So should investors be worried, at this point? Because this is more shares.
Yeah, we should be worried.
Coming in.
We should be worried. First of all, before we being worried, we have to also we hit them when they've done things that are not right. So when they've done things commendable, we need to commend them. With the Security and Exchange Commission, we need to thumb up for them for standing their ground for protecting minority investors. Remember that PZ was trying to delist at a price, and the SEC said, no, you cannot delist at that price. You need to give Nigerian investors more value. we need to commend the Security and Exchange Commission. We need to tell them that is what they are there for, to protect retail investors and minority investors, especially when they are Nigerians. So we have to commend the SEC management team for that. Yeah, looking at what the PZ are doing, remember that this current right, or will I call it right, or will I call it a share addition, is not going to go, it's only for the parent company, converting their loan of about $40.6 million into equity of about $36 million at a price of 23 naira 60 kobo. Now, remember when they wanted other Nigerian minority investors to delay, they were offering them 22 naira. Now they are offering 23 naira 60 kobo at the close of market.
Because it's a parent company.
Yes, at the close of market on February 13th. And today, if you open the PZ, it's trading at 27 naira. So you can see why I say thumb up to the Security and Exchange Commission for what they did. Now, going back to that result, you are owing about 40 million, but you are just converting about 34 million. So we still have that outstanding of 6 million. They have also increased their holding in that company from 73% to 83%. So 83% leaving retail minority investor with just 17%. And so when you look at it, yes, ordinarily it should be good news, but we are still going to go towards that delisting if history is anything to go by. Remember Flower May? Things like this started happening, even if they are not on the same circumstances, the same scenario. But for me, I think the beauty is that the retail investors are being protected by the Security and Exchange Commission. And if today they say they want to delist, they would delist them at almost 13 naira, 33 naira, which is better comparable to what they were giving them tomorrow. But I can tell you, laddie, the drive of PZ, the parent company, and PZ, the local company, is towards delisting. It might take time, but I still strongly believe that will happen.
How do you think investors should interact with that stock?
Cautiously. I mean, I can't be buying a stock at 27 naira when I'm not sure what it's going for. But remember, things like this have happened. Remember, O&O. So that's why I say history. O&O was there also at this price, trying to go out of the market. Security and Exchange Commission, not really Security and Exchange Commission here in Nigeria, but the Security and Exchange Commission in Johannesburg, South Africa, stopped them. And they came back, and a lot of Nigerians were skeptical at 5 naira, 8 naira. Oh, are they going to be delisted? Are they going to go in? And we didn't get to partake of it. Then one day we woke up to the news that they are buying up a development of Ajib, and today one day selling for 6. So in as much as
500%
profit. So even if you are a cautious investor, what I would advise for now, being cautiously, then if you are an investor that is a risk taker, I think PZ is good to take.
Yeah, we know the risk takers will love to feast on this one.
Yeah.
All right, so it's a rate setting week right here. We're going to have the first one in Nigeria, and everybody will know what the new borrowing cost will be in Nigeria. So what are you seeing for volatility, for the markets? Do you think investors, do they care at this point?
I think they don't care at this point. It's pricing already. They don't care at this point what is going to happen. If you look at ordinarily what we should see a rate hike, and it has been coming, it has been there, it has become normal. So the market have moved to that, shrub it off. Anytime it comes in, ordinary, a rate high should be negativity to the market. But remember, the market, because of inflation, even with the rate hike, what you get in treasury bill and fixed income space is not commensurate. And when you add that to what the market is doing in terms of dividend payout, in terms of capital appreciation, you still tend to go to the equity market and even go into all those commercial papers or treasury bills. So I think the market has priced in all that. And what will happen this week, Ladi, you and I know, is either they keep rates at what it is or they hike it. So whichever way, the market is going to benefit from it. There might be a little bit of a shocker. Oh, maybe investors say, oh, digest the news first, like always, and then begin to say, oh, well, it's not as bad as we think. Then what are the sectors that are going to benefit from it? What are the sectors that are going to suffer from it? We are beginning to see positivity in the industrial goods sector for the first time for almost a year.
Shout out to Dangote
last week, and that is largely driven because of the news of their expansion in Ethiopia. So that could be the game changer. But that a rate hike today will not favor local companies, especially even if they are listed in the market or even when they are not listed in the market. Cost of funding goes up. So, but again, for those big companies, like companies like Nigerian Brewery, like PZ that we just spoke about, rate hike would definitely not affect them any longer because they are not going cap in hand borrowing. But a company like MTN, the communication company, the shareholders form is still negative. They are also doing commercial paper. So they will keep doing that until they get to positive. So rate hike, the market has already absorbed it into
right.
the...
Well, we'll definitely still be covering it to find out, how it goes here. But thank you so much. It was great starting off the week with you. That was Mukhtar Mohammed, CEO of Finance with Mukhtar. Thank you so much.
Pleasure always, Laddie. Thank you for having me.
Thank you. All right, now, so yeah, we have more data, coming out for the African continent. The latest one in January 2025, we see African startups. They reached an impressive milestone, raising a record $289 million in funding. This marks a remarkable 240% increase from the $85 million raised just a year ago in January 2024. This surge places January 2025 as the second best month for startup funding in the past 6 years, only behind the funding peak of January 2022. With the dramatic rise in investments, we're witnessing a promising shift in the African startup landscape. All right, let's explore what's driving the momentum now. Joining us is Isaac Marshall, investor at TLG Capital. TLG Capital is a private investment firm which invests in SMEs across sub-Saharan Africa. Great to have you on the show. Good morning.
Yeah, it's good to see you, Lottie. Long time.
Yeah, a long time. It's great to see you again. And definitely, I'm sure you've been quite busy, since the last time we saw, because we're seeing this funding, coming in January for Africa. Talk to me about what factors you think contributed to 240% increase in funding for African startups, and that's just for January 2025.
Yeah, no, I think the year has started off extremely strong, and I think there's sort of two dynamics here. The first is the macro, right? Because if you look at the top four markets of where African venture capital is raised, the markets, right? It's Nigeria, it's Kenya, it's South Africa, it's Egypt. So if we look at last year to this year in all four of those markets, right? So Nigeria, 2023, the currency cuts by roughly half. 2024, the currency cuts by roughly 2/5, right? And towards the end of the year, stabilized. Right, the last 3 to 6 months, we've seen general stability in the Naira exchange rate. Then you look at Kenya. There was a situation where there was almost a near default scenario on the sovereign debt that was now restructured, and now they've sort of been upgraded from a credit perspective. Egypt had this massive deal with the UAE that sort of effectively bailed them out and gave them a fresh trajectory of renewed growth. And South Africa has just seen a credit upgrade at the end of 2024 at the sovereign level. Right. And so if you think about it, a lot of startup funding lags the macro environment. And this is true aside from just startup funding. It's just generally investors always lag. So when the trends are beginning to turn positive, that's when the dollars flow through. And really at the end of last year is when you saw the Money Point exit. You saw the Time investment in South Africa. And so now I think starting the year off, as a result, there's renewed investment activity on the back of those flows. And I think it's quite exciting.
Looking, more at this data, we're seeing equity financing that dominated the funding landscape. What does this, indicate about investor confidence, in African startups?
Yeah. Look, debt markets are structurally underdeveloped, right? Because there are kind of two problems. First off, as you know, the banks struggle to back some of the more tech-based models, right? And at the same time, there aren't a whole lot of private credit investors that operate in the African continent. And the reason why is, a variety of reasons. The currency, the size of the market is difficult to track. But I think the resurgence in equity is really the barometer of how everything else moves. I think when you see more equity pour into these startups, that's when debt begins to pick up. I think the leading indicator is actually equity funding rounds. And what the VCs are funding is also quite interesting. Because when you look at global VC, today it's really an AI play, right? Everybody is talking about 50% of global inflows into VC are going into AI companies, right? In Africa, it's a fintech play. 50% of the flows are going into financial technology companies, right? In other words, to provide the banking rails that don't exist to circulate credit throughout the economy. Right. So it's also in Africa, the VCs are funding a very specific part of the market, which is important to think about.
All right, so it's going to fintechs again. Are you seeing any other industry, getting attention, at this point? Are there any indicators, that we're looking at other industries, not just, fintech? And is fintech getting boring?
Yeah.
Is it getting boring yet?
It's interesting because, Lottie, I think one of the challenges is that in the very beginning of VC market development in Africa, if you look at Nigeria's market development, it actually began with homegrown entrepreneurs. And oftentimes there is a concern from the global investment community that, okay, one of the challenges with African markets is because you have development finance and other impact investors, the risk premiums, the rate of returns are not that high because you have other people investing that have sort of non-commercial goals. Venture capital is perhaps the big exception to this. And this is not talked about very often, but actually, if you look at how venture capital emerged, it really was in the beginning homegrown angel investors, homegrown entrepreneurs who had built businesses and sold them, backing their compatriot entrepreneurs and getting the industry off the ground. And I think now that has begun to evolve, where you're now beginning to see development finance dollars entering the market in full. And I think while VC has been a big focus in fintech, the other sectors that you need to see, in my view, are really these industrial type businesses. Because in contexts where most stuff in Nigeria is imported, most stuff in Kenya is imported across the continent, there's a huge amount of imports, and there's opportunity to manufacture. But what you need is a shifting in return expectations for that to happen, right? If you're going to fund early stage entrepreneurs that are building industrial businesses, it's a very different return expectation than sometimes venture capital is looking for. And I think it's also a much more patient form of capital than I think people are typically used to seeing in venture.
I'm talking about, being patient at this point. We know raising this capital is not a walk in the park, What challenges or opportunities do you see, African startups, facing as they continue to attract, global investment?
I think that the big theme is this: venture capital and startup markets will develop when African entrepreneurs are able to build businesses that are solving global problems, right? I think oftentimes people think about their business just solving a local problem, but I think in a world where increasingly you can tap into and scaffold on top of many of the AI tools that are coming out, you can scaffold on top of many of the other financial infrastructure plays that are coming out. I think that there's a real opportunity to develop and scale to tackle problems that are both within a country and across countries in Africa and even around the world. So I think long run, I'm quite opportunistic on one thing above all else, and that's that the entrepreneurial spirit in these markets is actually enormous. I think, as you know, it's like every single person you meet from Nigeria has like 3 jobs at the same time. They're starting so many different ventures, and that's because in the culture, there's a sense of ownership, there's a sense of creativity, there's a sense of solving problems. And I think that is really what's going to put these markets at the forefront and really creates the opportunity set.
Right, Isaac, and I'm starting to wonder, how many jobs do I have at this point? Maybe, anyway, I'll try to remember.
You wear so many hats, my friend.
All right, so what trends are you expecting that will shape the African startup ecosystem in 2025? And that's according to industry leaders.
Look, the truth is, if you look globally, most of the time when startups do well, it's because they are growing users and growing revenue to solve a problem, and then they get acquired by one of the large tech players, right? That's typically how things play out in the West, in the United States in particular, with the startup scene, which is really the main startup scene globally when you look at just size. In Africa, the dynamic is a little bit different. Exits are a lot tougher. You have money point, you have time, but these are relatively rare situations. Most startups don't have the destiny that Moneypoint or the destiny that Time or MNT has had. And so I think in Africa, the name of the game is profitability and the name of the game is surviving. If you can demonstrate that you can solve a problem, don't try to scale too quickly. All the time I see fintech companies that are doing lending businesses that grow too fast, too quickly, and they start facing large non-performance, they start burning through money. this is a very challenging model. I think the name of the game in Africa is, there's this saying, if you want to go fast, go alone. If you want to go farther, go together. I think the name of the game in Africa is, if you want to go farther, don't burn money. Don't focus on profitability, focus on keeping the business alive, because there aren't that many competitors. And so if you can stay alive in the market for longer, then you can end up owning the market and you can end up providing solutions that are needed to a lot of customers. But the critical thing is profitability and keeping the business going.
Right, and talking about profitability, I know you investors, you also look at local currency. You put your eyes on what's playing out with the local currency. Are you getting confident, about the Naira going into 2025?
Look, I told you, what is it, 4 months ago, I've been long the Naira in my personal account. At the level of my firm, we hedge all of our investments in local currency. But I think it's been pretty stable. Right. I mean, the Naira, I haven't seen, if anything, actually, the last time I exchanged Naira into dollar, it was a higher exchange rate. Right. Which is fantastic. I think really kudos go out to everyone who's, look, I think on the ground, it's extremely difficult for people because inflation has come so high. Oil and gas, gas at the pump is so expensive. The imports that people are buying are so high. But I do think the situation has stabilized markedly from 6 months ago. And I think on a going forward basis, I think that these currencies are cheap. I think that there's really an opportunity to invest. And I think that, of course, it takes time for the global investment community to see that opportunity. Right. So I think the folks who know the market will enter. And then over time, I see a lot more flows coming to these markets because we're really coming out of a difficult period. And I think the years ahead are very, very positive. A lot of bitter medicine has been swallowed. And I think we have to watch that take root.
Right. And, talking about the bitter medicine, at this point, we're definitely hoping it gets easier, going forward. Yeah. But, it's a record raise, for January, $289 million compared to 2024's $85 million. But how can African startups maintain this growth, trajectory and, further solidify their position on the global stage?
It's a great question, Lottie. I think the core message is to generate their own cash flow. I think try to solve problems that are smaller rather than bigger first, which is super counterintuitive. Oftentimes you see U.S. or global companies, they try and solve these enormous problems right out the gate. But the truth is, most of the outcomes globally are actually negative. I think the differences with global startups is that there's so much money that people lob at the problem that businesses don't die for a lot longer. I think problems are allowed to persist and fester until finally they cataclysmically fall apart because people just continue to take bets on the entrepreneur because frankly they have too much money. And so they just keep lobbing money into the problem. But in Africa, that kind of liquidity doesn't exist. And so as a result, problems in business models are detected much earlier and the companies die much earlier. So I think the name of the game is really if you've raised a round, to focus on profitability, to focus on refining the model on a small scale first. I think that there's actually a huge amount of businesses to be built, by the way, that really solve small and local problems. And I think there's too much focus on massive scale. Just generating profitable businesses that are sustaining creates the platform by which you can solve bigger and bigger problems. And I think that's important both for the funds investing in Africa as well as the companies building.
All right. Thank you so much, Isaac Marshall, investor at TLG Capital. It's always great having your perspective. Enjoy.
Yeah, man. Great to see you.
Thank you.
Thank you so much, Lottie. Take care.
All right, now let's get a check on what's playing out in the global space at this point. Yeah, we know. Yeah, Business Morning. We've changed the format, somewhat at this time. We're having John McQuarrie now. Tell us what's playing out in the global economy. It's great to have you on this side. Happy New Week.
Happy New Week and happy welcome back to about an hour of business morning.
Yeah, 1 hour of business morning.
Yeah, so now we can spread our tentacles. We can do outside Nigeria outside Africa and see what's happening in the global scene. I guess that's one opportunity that we have coming back to 1 hour of business morning. So I don't know if it's to say more work for you or congratulations.
Yeah, congratulations, more work.
I know Isaac did leak one of your secrets that you have another job, laddie.
Yeah,
I'm going to ensure that I investigate that.
Yeah, because he said Nigerians have a lot of jobs.
A lot of Nigerians have more than one job.
More than one job.
Yeah.
So maybe 3 or 4. But, it's quite interesting, talking about the global scene at this point. I remember when you and I were reporting about the Russia-Ukraine war, we talked about it a lot.
Yes, we had a special program then.
Exactly.
For it.
But now peace talks on the cards.
Yeah, well, I don't know. I mean, I'm hopeful, and I do hope that it does come through, because President Trump promised us, in fact, he said he was going to ensure that there's peace before he gets into the White House. So he missed that target, but let's hope that he can get it. Because I'm hearing there's a talks going on and President Zelensky is not there. Europe is also complaining that they're not being carried along. Meanwhile, we do know that the economy has also been very well affected by the war in Ukraine. They've also been of great aid, to Ukraine all through this period. So having the peace talks
without those parties,
and we know Ukraine is supposed to be a member of what's that body in the EU that they're also seeking to be, and it's all part of the EU. They have boundaries with those countries. Remember when Polish farmers in Poland were protesting, because of the help being given to farmers in Ukraine. So, I mean, having peace talks without the neighboring and affected countries. It's quite
interesting to see how it all plays out.
Yeah, I mean, laddie,
Trump wants what he wants.
Yeah, but Trump cannot always get what he wants. All right. Okay, so now let's see what's going on outside Trump. And so we'll start from Asia. In Japan, we see the economy expansion in the fourth quarter. That's their GDP. It beats analysts' expectations quarter on quarter, and annualized growth boosted by a jump in export. Preliminary government data shows on Monday that GDP grew 0.7% quarter on quarter, more than the 0.3% rise expected by economists, and then it's expanded by 0.4% in the previous quarter. A jump in export is what boosted this GDP, while domestic demand was a drag on growth, contracting marginally. Capital expenditure also went up 0.5% quarter on quarter, but it missed the estimate of 1% rise. And then the GDP data comes against the backdrop of Japan's central bank raising rates to 0.5%. That's the highest level since October 2008, and it offers more room to stick with a monetary tightening. And yes, we're talking about U.S. and Ukraine there. U.S. President Donald Trump hopes to secure access to Ukraine's rare earth minerals, but it hit a wall over this weekend after President Volodymyr Zelensky rejected the bid on the grounds that it was too focused on United States interests. Well, what do you expect? President Trump has said it. It's all about the U.S. Prospect of an economic pact in the exchange for Washington's support for the war-torn country has gained traction over the recent days amid talk of a wider deal to end the war. But Zelensky says that the offer tabled thus far did not provide any specific security guarantees for his country. Still, officials at Munich Security Conference have said that there's scope to negotiate a deal that's palatable to both sides. U.S. Republican Senator Lindsey Graham has said that such a deal could be a game changer in resolving the conflict and a nightmare for Russian President Vladimir Putin. Well, from there, let's see the techs. Intel's rivals, Taiwan Semiconductor Manufacturing Company and Broadcom, they are each eyeing potential deals that would break the U.S. chip-making icon in two. Wall Street Journal reports that, citing people that are familiar with the matter, Broadcom has been closely examining Intel's chip design and marketing business. The journal reports that the company had discussed a potential bid with its advisors, but would likely only proceed if it found a partner for Intel's manufacturing business. Talk about competition going on right there in the ICT or IT world. Well, TSMC, which is the world's biggest contract chip maker, has separately studied controlling some or all of Intel's chip plants, potentially as part of an investor consortium or other structure. Broadcom and TSMC are now not working together, but all of the talks so far are preliminary, largely informal, according to reports on the matter. Now, still staying in the IT area, DeepSeek is in the news again. This time it's from South Korea. South Korea's Data Protection Authority said new downloads of the Chinese AI app DeepSeek had been suspended in the country after DeepSeek acknowledged failing to take into account some of the agency's rules on protecting personal data. The service of the app will be resumed once improvements are made in accordance with the country's privacy law and Personal Information Protection Commission. This was released at a press briefing. The measure that came into force on Saturday aims to block new downloads of the app, and the agency said though DeepSeek's web service remains accessible in the country, the Chinese startup appointed legal representatives last week in South Korea and had acknowledged partially neglecting considerations of the country's data protection. Italy's Data Protection Authority also said last month that it had ordered DeepSeek to block its chatbots in the country after failing to address the regulator's concerns over its privacy policy. But DeepSeek has not immediately responded to all of this. So is this a temporary roadblock, or will the US win over DeepSeek? We'll see in the coming days. Now let's move over to the UK now. And thankfully we have Juliana joining us for this. Hi Juliana, good morning. And well, good to have you back on our elongated business morning. I guess top on the list for conversations this morning is what's going on from President Trump to other parts of the world. The latest one, of course, is the steel. I know yourself and Ladi talked about this, but what's the latest? We hear that UK is warning US steel on US steel tariff that it could harm both countries. But do we have any improvement on what we've heard before now?
Good morning, Annie. No, the conversation hasn't actually moved any further than what was discussed last week. I think what we're awaiting is further movement from US President Donald Trump. I think the UK political elite, they're quite worried at the moment. I think worried is probably a really good description for the mood music in the UK. I think all of us have really enjoyed, to be fair, the kind of blockbuster events we've seen from the Oval Office with the signing of these executive orders. But of course, there has been fear put into the UK steel industry because of the potential of a 25% tariff, of course, not just on steel, but on aluminium. I think when the news first broke, we did hear a total uproar, as to be expected, from leaders within the sector who said that Donald Trump had basically put a sledgehammer through it. And I think for perspective, it's good to kind of dig down at the numbers. Now, at the moment, only 5% of steel exports in the UK head to America. So this wouldn't impact the entirety of the sector. I think it's worth about £400 million per year. But as we know, this isn't just about one jigsaw piece. This is about the whole puzzle. And yes, there are concerns about, what this would mean in the long term for the UK economy. Now, the conversation has gone twofold. As we know, a lot of people enjoy getting into online spats with US President Donald Trump. Perhaps it's because it makes them popular. But Rachel Reeves, the Chancellor of the Exchequer, and the UK Prime Minister, Sir Keir Starmer, have been really toeing the line, very careful not to offend the US President. So they, on the record, have been very, very optimistic, again, seeking that there will be some sort of free trade deal amongst the two allies. But also, I think most importantly, they have highlighted the fact that the UK-US trade imbalance isn't as wide as other countries. So I think Westminster are keeping their fingers crossed, hoping that Donald Trump exempts the UK from these levies.
Well, I bet some parts of the world are also expecting the same thing, Juliana, because, I mean, we know the UK and the US, are they brothers, are cousins, but, it's been a close relationship, so we do hope, but we'll be keeping our ears close to the ground on that. Now, this talks about peace talks between Russia and Ukraine. We've seen the EU complain that they are not being carried along. I wonder what the UK stance is, or if they are part of the peace talks.
Yeah, this is pretty serious. I've just seen some pictures live, just as you were talking with Laddie, of the Foreign Secretary, Marco Rubio, arriving in Saudi Arabia for those peace talks. I believe Volodymyr Zelensky has also arrived in the UAE. And again, we're getting on really dangerous times. I think, there is certainly going to be a new trajectory towards defence and Europe, and a lot of this was sparked from J.D. Vance's trip to Europe last week, where, as we know, at the Munich Security Conference, he totally ripped the rule book apart, and he said, that the US can no longer basically defend Europe. Europe has to defend itself. So what we know is that today there is going to be, of course, these security talks in Paris, which are being spearheaded by Emmanuel Macron. Sir Keir Starmer, the Prime Minister, will be in Paris for those talks. But again, I think there is concern among the UK political elite, and that's because I don't think they're comfortable being second in command to Emmanuel Macron, because if we go back to when this war first started a couple of years ago, it was certainly Britain that was leading the Western alliance in defending Ukraine. Yes, of course, because of the sheer size of the US, they had put in vast amounts of more money than the UK did, but certainly we put billions of pounds in defending Ukraine. So I think there are concerns that perhaps is Sir Keir Starmer falling behind, and that the UK should be leading any peace talks and not be, scrambling around Olaf Scholz of Germany and Emmanuel Macron. So let's see what happens today. Another major issue, which is being discussed within these cold isles, is the fact that defence spending in the UK has been desperately low for many, many years. There are so many reports that have come out saying that UK troops are using dilapidated weapons and machinery. This is a major discussion, and I think there are going to be some serious repercussions, not just for Europe, but also internally between Rachel Reeves, the Chancellor, and Sir Keir Starmer, the Prime Minister. Rachel Reeves, very apprehensive about spending more. But yes, I think that the sound bites that are going to be coming out of the Far East and Europe over the next couple of hours are going to be very important in terms of the New World Order.
Yeah, important indeed, Juliana. And we trust you to be our eyes following that story. But what else can we expect this week? Data, economic data, and conversations?
Quite a big week for global news, as I said, because we've got those peace talks taking place in the Far East, and then we've also got the peace talks taking place in the UK. But in terms of data, big week for Rachel Reeves, the Chancellor, who I must say is on resignation watch. So much news has come out from number 11 Downing Street over the past couple of days about whether or not Rachel Reeves is good enough for this job. In Westminster, she's called Rachel from accounts because people don't believe that she had the experience in the Bank of England that she claims to have had. Hence why her fiscal statement has caused so many issues within the markets, including the bond market. So we've got a set of data this week that if it's not good, I'm not sure Rachel Reeves will be Chancellor on Monday. Don't quote me. And we've got UK unemployment data tomorrow. Really important forensic look, an insight on the British labour market. We've also got inflation on Wednesday. Again, inflation creeping up slowly. And then on Friday, we've got retail sales, which of course is going to check the temperature of consumer spending habits. So it is going to be a big one. As I said, you know, Sir Keir Starmer had publicly backed his Chancellor Rachel Reeves on countless occasions, but we are beginning to see strains. Are we going to change Chancellor at the end of the week? It's possible.
Yeah, very busy week, Juliana. Yes, I won't quote you. Well, thank you so much for that perspective and sharing the expectations for the week, and enjoy the rest of your day.
Thank you, Innie.
All right, we're going to have European markets later, but it's expected to open in the mixed territory today. But during Business Incorporated, we'll have Lars Holter. Lars Holter is joining us to give us intraday numbers at that time, Ladi. But I mean, interesting that we can go around the world, and the talks, the peace talks, you know, seems to be top on the list. I don't know if it's going to overtake Trump's tariffs,
right?
But but I know the peace talks is on, because when that war started, it affected everybody in the world. Every country felt the impact, or still feeling the impact. So everybody's eyes will be on
all eyes
that.
on it. I already got recommendations from Goldman Sachs over the weekend. You know, talking about peace talks and how that would impact, you know, natural gas, you know, prices in Europe, and they're seeing natural gas prices will actually go down.
Yes.
If the peace talks, you know, are favorable.
Go on. But I mean, just a little bit worried about this. UK is not involved, the EU is not involved, and these are countries that are directly affected. You know, perhaps, I don't know, I know they're meeting in Saudi Arabia, but President Trump is at the helm of affairs.
Right.
You know, can we have, you know...
hopefully we have all parties.
Exactly. So it should be a rounded talk with a lasting peace at the end of the day. That's what the world needs.
That's what we need right now. Peace in the world.
Yes.
Thank you so much.
All right.
Innie there for giving us what's playing out in the global markets and global economies and how it impacts Nigeria. But, you know, definitely let's look at the Valentine Trade Week. That was last week. It was quite an impressive one. Over 2% rise there for local boss. That's for last week. We put up all the trades together. It was an impressive one. Investors made quite a penny right there in the markets last week, and definitely be looking out to see how, if that, you know, sips into the trades. That's for this week. That's the week after Valentine. We'll definitely be looking out for that. At 1 p.m., we'll give you a sense of what's playing out in most of the markets that we track, from the local bourse to global markets that we track, as well as the cryptocurrency market. That's at 1 p.m. Today. Thank you so much for watching Business Morning. I'm Ladi Williams from me and the team right here at Channels HQ's. Bye for now.